Now, I mentioned this in the opposite sequence. I'm going to talk about statements, but again, statements usually comes before closing entries, right? I'm going to talk about the differences of statements compared to service type of business. The red highlighted ones really is the same as what's there on the board. Red highlighted accounts, just the new ones, that you have to know where it falls into financial statements. So for income statement, you will see new accounts, sales. Some companies call it sales or sales revenue. These are interchangeable terms. And then if there are cases of returns, allowances, discounts, it will be listed right underneath sales account. Cost of goods sold expense. This is a very major expense account that service type of business do not have. Only merchandiser business has this account. And usually you would see this account having a value that's a lot more significant compared to other expenses. Okay, because it basically represents the major part of major cycle of how this type of business generates profit. So inventory is purchased in and then inventory is sold out. Once it's sold out, it increases cost of goods sold expense. Okay, now the differences compared to this in prior 4 chapters, financial statements, another one very important, inventory account. Okay, so this basically is how a company generates the money from. They purchase inventory, then they resell it. So besides these red highlighted ones, really other accounts are pretty much the same. You will still see accounts receivable, you will still see accounts payable, you will still see furniture, equipment, machinery. The red highlighted ones are the new ones introduced in this chapter. Now, earlier in the first 4 chapters, the income statement that we talked about, grouping revenues and then minus all the different types of expenses, that type of income statement is called single-step income statement. So meaning that we just have a step of revenue minus expenses and then we arrive at net income. So earlier what you have learned so far, the income statement is called single-step income statement. For merchandiser's business, a lot of the corporation uses multi-step income statement. I'm going to show this in the next slide here. Multi-step income statement provides some of the subtotals of profit, subtotals of income before we actually get to net income. So basically it breaks down information in more details. So creditors, investors, they can look at specifically after selling inventory without considering other expenses, what's the profit? And then if we consider major expenses, what's the income there? And then after considering all the expenses, what is the final net income for this season? So it provides additional information compared to single-step income statement when there's only net income at the end. And